The report basically tries to gauge access to housing and housing finance for the poorest and for lower middle class population groups. The problem with South Asia is that not only is it the region with the most poor, 1 in every 2 poor people in the world actually reside in South Asia, but also the housing markets in South Asia are more limited than in any other continent in the world. By some measures, for example, mortgages to GDP, South Asia is measured at about 3%, comparing, for example, to a country like China or Thailand, who are all above 15%. These two factors combined cause a significant percentage of people in South Asia to be underserved in terms of access to housing and access to mortgage financing. The key messages of the report are that while we have about 38 billion missing housing units in South Asia that are needed to be built and given to markets, and that represents about $200 billion investment in housing markets that is necessary, quite a considerable figure. While we have these needs, the markets are indeed growing. They're growing at about 30%, which is very, very fast growth by any standard. The problem is the growth in markets for housing and housing finance are not reaching the poor. So in order for markets to actually expand enough to reach the poor, we would have to present more original solutions to the problem. The markets themselves will not automatically grow themselves out of the problem with the underserved. This original solution, as we suggest in the report, would involve new and innovative housing finance instruments, as well as more work on the housing finance infrastructure to provide long-term financing. Other than that, there is a whole slew of regulatory measures that could be modified in order to enable markets more, such as administrative use of land, foreclosure regimes, and above all, credit information and housing finance information provision.